Hello, and welcome back to Explain the Charts, your channel for in-depth technical analysis. Today is November 28th, 2025, and we are taking a close look at Microsoft, ticker symbol Microsoft. There's a lot of conflicting sentiment in the air right now, so let's start by unpacking the recent news before we dive into the charts. The big headline recently has been the analyst downgrade from Rothschild and Company on November 18th. They shifted Microsoft from a buy to a neutral rating and slashed their price target from $560 down to $500. Their reasoning points to growing skepticism about the long-term economics of generative AI, suggesting its capital intensity is far higher than the market assumes. This has fueled broader AI valuation jitters across the tech sector, leading to significant profit-taking. Adding to the bearish pressure, the Gates Foundation Trust sold off a massive 17 million shares, reducing its stake by 65%. However, the picture isn't entirely bleak. While Rothschild downgraded, other major firms like Baird, JP Morgan, and Citigroup have maintained their outperform or buy ratings, with some even raising their price targets. This creates a classic battleground scenario between bullish long-term growth prospects and bearish short-term valuation concerns. Now, let's see how this narrative is playing out on the daily chart. Looking at the bigger picture, we can see Microsoft has had a phenomenal run, peaking at an all-time high of $555.45 at the end of July. That rally was likely fueled by the incredible AI hype and strong earnings we saw mid-year. However, since that peak, the stock has experienced significant volatility and a clear pullback. After the high, we saw a sharp decline through August, eventually finding a floor before attempting another rally into late October. That rally failed to make a new high, topping out around the $540 level, showing weakness. The subsequent drop has been sharp, bringing us to where we are today. Now let's zoom in on the recent price action, starting from the beginning of November, which is where the real drama begins. As you can see, the stock was trading above $530 at the end of October, but began to slide. The real catalyst for the sharp drop appears to be that analyst downgrade on November 18th. If we look at that day's candle, we see a massive gap down and a close near $493, a more than 2% drop from the prior day's action. This event broke the psychological $500 support level, which is a significant technical development. The selling pressure continued over the next few days, with the price cascading down to a recent low of $468.27 on November 21st. This area between $468 and $472 has now become a critical short-term support zone. Any break below this level could signal another major leg down for the stock. Conversely, the area around $495 to $500, where the price broke down, has now flipped from support to a formidable resistance level. The bulls need to reclaim that territory to regain control. Looking at the hourly chart from before this major drop, we can see the price action that set the stage. In the week leading up to November 18th, Microsoft was consolidating in a range mostly between $500 and $510. The $500 level was clearly acting as psychological support, with multiple hourly candles finding buyers there. However, the repeated tests of this level without a strong bounce showed weakening conviction from the bulls. The eventual break of this support on high volume, as we saw on the daily chart, was therefore a very powerful bearish signal. Now, let's switch to the 15-minute chart to analyze the most recent trading sessions from this week. This gives us a granular view of the current battle between buyers and sellers. On Monday, November 24th, the price action was choppy, mostly consolidating after the big drop late last week. Then on Tuesday the 25th, we saw an interesting move. There was a sharp sell-off in the afternoon, pushing the price down to a low of $464.89. However, this dip was aggressively bought back up, forming a bullish reversal pattern on the intraday chart and closing well off the lows. This suggests that buyers are becoming active and defending this $465 support level. Following that, on Wednesday the 26th, we saw a strong follow-through with a gap up at the open and a rally that took the price all the way to a high of about $488. This indicates strong short-term bullish momentum. The key question now is whether this bounce has enough strength to challenge the major resistance overhead. So, let's pull back to the daily chart to recap and formulate a game plan. The story is clear: a long-term uptrend has been broken, and the stock is now in a correction phase, heavily influenced by shifting sentiment around AI. Let's summarize the key price levels to watch. Major long-term resistance remains at the all-time high of $555. More importantly, the zone between $495 and $500 is the first major hurdle for the bulls. On the downside, the immediate support level is the recent low, between $465 and $472. If that support breaks, the next significant level to watch would be the previous consolidation area around $430, and then the psychological $400 mark. So, what are the likely scenarios? In a bullish scenario, which I would place at about a 60% probability for a short-term bounce, is that the recent low at $465 holds. We need to see the price continue its momentum and decisively break above the recent high of $488. If that happens, a test of the $500 resistance zone becomes highly likely. A move above $500 would signal the correction is potentially over. In a bearish scenario, with a 40% probability, this recent bounce from $465 is just a dead cat bounce. If the price fails to break above $488 and rolls over, it would confirm that sellers are still in control. A definitive break below the $465 support level would be a very strong bearish signal, likely leading to a swift move down to the $430 to $440 range. Traders should watch for volume on the next move. A high-volume break above resistance would strengthen the bullish case, while a high-volume break below support would confirm the bearish trend. As always, keep an eye on broader market news, especially concerning the tech sector and AI sentiment, as it will heavily influence MSFT's direction. That's our analysis for Microsoft today. Thank you for watching Explain the Charts. Finally, a brief disclaimer. This video is for educational and informational purposes only and should not be considered financial advice. Trading and investing involve risk, and you should always conduct your own research and consult with a professional before making any financial decisions. If you found this analysis helpful, please hit the like button, subscribe to the channel, and let us know your thoughts on Microsoft in the comments below.